the country's largest bank, State Bank of India, disappointed the street with an 18.5% drop in its profits. Now, the first quarterly drop in 2 years almost. And it was hit mainly by a spike in the restructured assets and consequent rise in the provisioning for bad loans. Remember, ET Now was the first to report on Monday that SBI will show a spike in restructured assets and lower slippages. Not surprisingly, the markets punished the stock because of this performance, and it ended the day down nearly 8%. Let's hear out the management on the performance of the company.
The pressure on asset quality continued, though the decline as measured in terms of new assets or more assets falling into the substandard category perhaps got arrested, but the provisioning requirement in respect of accounts that are already in substandard or doubtful category, that increased substantially. So with this, the results are a mixed bag.
And Anirudh Ghosh is right here to do all the analysis of the State Bank of India's numbers. Anirudh, take it away.
Well, the State Bank of India is disappointed with its profit growth this time around, and the key concern remains on the asset quality front. This time around, the concern has been on restructuring, the fact that the restructuring book has grown by 8,600 crore rupees in the fourth quarter alone. Of course, it's much higher than what a number of banks have done, and also much higher than what we've seen from State Bank of India in the past few quarters. In terms of their fresh slippages into NPAs this time around, that number has come in at about 5,600 crore rupees. It's much lower than what we've seen from SBI of late, but then it still is a very high number. Of course, these two numbers were reported by ET Now on Monday itself, so clearly these are things which the market had priced in, but then again we've seen a reaction on the stock today as well. Also, if you look at their core net interest income and the net interest margin, we've seen a decline over there as well, so clearly another downside coming in from those metrics. Of course, the concerns for SBI continue to remain as far as their restructuring is concerned, as far as their asset quality is concerned. The only bright points here, though, remain the fact that their credit growth has been very high, driven mainly by retail credit. So clearly that's a bright point. The other thing, of course, is the fact that they would be looking at improving their margins going forward because of the fact that that interest rates are going to be coming down. So, of course, that's a thing that's been pointed out by the management as something that's going to be helping the bank going forward.